I'm outside in an AMG, right outside, TT, two-turn baby girl, you know me, still with the dogs that I grew beside, all the niggas brown, ride and they die, gotta watch the time cause it's flying right by.
What's going on YouTube? It's your boy Chris, aka The Capital Connect, and in today's video, we're going to be talking about indicators, man. Basically, I had somebody reach out to me on Instagram asking me about my take on, indicators. Do I feel like they're necessary? And I feel like I'm qualified to speak on this because, my whole first year of trading, I was a indicator warrior, man. Like, I tried all the indicators you can think of. I used the RSI, I used the stochastic, I used, the harmonic scanner, I used fractals, I use the alligator strategy, I use moving averages, I use so many different things, the parabolic SAR, I use so many different things, bro, and I was still unprofitable, I still lost money. So I feel like I'm very qualified to speak on this. When it comes to indicators, guys, we got to understand one thing, right? Indicators are a good confirmation, but they are a horrible determination. What does that mean? What I mean is, if you are using an indicator as an extra confluence or as a confirmation along with other things, then indicators are good. If you are using indicators as the sole determining factor on whether you are going to enter a trade or not, then you will be unimpressed. Matter of fact, you will be furious with the results. Why? Because indicators are always lagging, bro. They're always lagging. So if you are depending on an indicator to tell you when to enter a trade, when not to enter a trade, you're always going to be behind, right? So I'm not just going to tell y'all that. I'm going to give you examples, man, because y'all ain't going to believe me. So I don't use too many indicators, right? I do use moving averages, right? So let me go ahead and turn those on right now for this example. So the moving averages that I do use are the 50 SMA and the 9 EMA. Why do I use those? Simply because the 50 SMA, in my opinion, shows me the intraday trend, right? And the 9 EMA shows me, momentum as far as when I'm on these lower time frames, right? So I use indicators or these indicators as a confirmation, not as a determination, right? Let me show you what I mean. So looking at this chart real quick, let me just go to the setup, right? Looking at this chart, right, we can see that we have right, this regular demand setup, right, order block setup, whatever you want to call it, right? I know a lot of y'all traders supply and demand are on my channel, so we just gonna call it a demand setup. So we got this regular demand setup, right? We got our breaker structure here, right? And matter of fact, let me turn off the indicator for this because I want to show you guys all the confirmations we have prior to entering, right? Prior to even looking at the indicators, right? So we got our breaker structure there. If we go to our higher time frame, what do we see? So looking at the daily, right, we can see that we are inside of a daily fair value gap, right? A daily bullish fair value gap, no candles close below this fair value gap. That is a good sign. I'm gonna go ahead and take that off. Now, go down to the 4 hour. On the 4 hour, come on, computer, I need you to catch up with me. But on the 4 hour, right, some of you guys may be looking at this and say, dang, bruh, we looking mad bearish right now, bro. Like, look at this. We fell off a cliff right here. And we broke structure right here. Like, certainly, bro, you shouldn't be looking to buy. Why shouldn't I? Why shouldn't I be? Let me turn off this magnet real quick. Right, we broke structure, man. Why would you be looking for buys? Because is that a major breaker structure or a minor breaker structure? But we got to understand, guys, when it comes to structure, okay, right? When it comes to structure, there's major structure and minor structure. Major structure are going to be your key swing points. What I'm marking out right here. Minor structure is all the mess that's happening in between, right? All this mess that's happening in between, right? Like that's minor. So if we look at this chart, okay, we see that we had a high, a low, and then a high, right? So just because we broke these lows does not mean that, oh, we must be in a downtrend now, right? What would have to be broken for me to start saying, okay, maybe we're flipping maybe we're flipping sentiment and maybe we should start looking for sales, right? We about to break this low. Why? Because that is the major structure point. That is the major low, right? So if we're just following market structure, right, we're still in an uptrend. Okay, so going back to the 5 minute, or we can even go to the 1 hour real quick. Same thing, understanding the higher time frame, right? Yes, it looks like, oh, we're bearish, we're breaking structure, but we got to understand on the higher time frame, we are still in a uptrend, right? So it makes sense to still be looking for buys. So going to the 5 minute chart, this demand makes sense because we understand we just finally potentially completed the pullback, right? And now we could be looking to continue to go higher, right? So this demand makes sense. But let's just say you're on the fence and you're like, bro, I don't know if I should take this or not. Turn on your indicator, bro. Whatever indicator you want to use, turn on the indicator and you can see what? We got the 50 SMA below us, right? And we got the 9 EMA with us as well. So that means I got the intraday trend and I got momentum on my side, right? So if I was on the fence about taking this setup, after seeing those two things, I'm pulling the trigger. I'm pulling the trigger. Why? Because it's an extra confirmation. And I'm actually going to be making a video here soon, actually, a day trading secrets from the Bible video going over how to know from a biblical standpoint when to enter a trade and when not to enter a trade. The Bible doesn't talk about that. Sure it does. And I'm going to show you. It's going to be the next day trading secrets from the Bible video. I'm not sure if it's going to be the next video or not, but I will let y'all know, so y'all stay tuned for that. But as you guys can see, man, using this indicator, right, we found out like, okay, we can go ahead and pull the trigger on this trade, and it was a good confirmation. So if you were on the fence about taking this setup right here, turning on the indicators would have helped you maybe get over that hump and finally pull the trigger on this trade. But I know y'all ain't gonna believe me just after one example. So let's go ahead and go to the next example. All right, y'all. So for our second example, you know I had to pull out the uni. So we're gonna be looking at a uni setup. Now, again, we got the indicator turned off that I use. Let's look at all the other factors before we turn on the indicator, right? So let's go to the daily chart. Looking at the daily, what do we see? We're clearly on a uptrend. Like it's clear as day. We're clearly on an uptrend, right? Some of y'all may be like, Chris, we broke structure. No, we did not, y'all. We did not break structure. We did not break major structure. Did we get a candle close below this level? No. So to me, that's just a liquidity sweep. That's a liquidity sweep as we tapped into this fair value gap right here, right? So this is still looking very, very, very bullish to me. Let's go to the 4 hour. And yes, I understand that we're tapping into this daily bearish fair value gap. But again, if we are overall bullish, right, I'm gonna have to see more than just one bearish sign before I start being like, okay, yeah, we're bearish now. So let's go to the 4 hour. What are we looking at? Same thing, right? I'm seeing a sweep of liquidity, whole bunch of liquidity. We even see on the 4 hour, we swept this low before tapping into this fair value gap still. So again, we're still looking very bullish. And then if we're looking at more recent price action, we see that we have this fair value gap that price has also tapped into. I forgot I turned my magnet off, but we can see that we're tapping into this fair value gap as well, right? Go to the 1 hour. I mean, y'all, it's literally just rinse and repeat when you're on these charts. We see again, we're tapping into this fair value gap, sweeping liquidity. So I'm thinking we're very bullish. So let's go to the 5 minute. So looking at the 5 minute chart, what do I notice? Let me delete some of this so we can have a clearer or a cleaner chart. Looking at the 5 minute chart, I see that all of these session highs are still intact coming into the session. Cool. So what am I doing? Right, I'm just looking to see, okay, which way are we going to go? Right. So I see that we sweep, right, the previous day's PM session low. Right. We don't get a candle close below that. It's a wick, which is beautiful to me because that's looking like a liquidity sweep. So now I'm just waiting to see, okay, what is price going to do? So I went ahead and marked out my breaker block. Why is this the breaker? This is the last bullish candle before the sweep of that low. So this is now our breaker. And now we're looking for a fair value gap to overlap with that breaker in order for our uni setup to complete, right? So we have this fair value gap that overlaps with our breaker. Now, if I'm being fully honest, I would not be taking this setup just because of the time it happened, right? Or when the entry happens, right? The entry happens at 12:15. I'm not on the charts at 12:15, so I wouldn't be taking this. But this is just an example of when, like, okay, let's just say you're on the fence, right? You not sure about unicorns. You're not sure if you want to take this setup. Okay, let's turn on the indicator. Let's see what's going on. What does the indicator show me? I got the 50 SMA underneath my entry. I also got the non-EMA with me, right? By saying that the non-EMA is with me, I'm saying that I got momentum with me, and the non-EMA is underneath or right at my entry as far as this setup goes. So I got both those indicators with me, or both those moving averages with me. So now if I'm on the fence about taking this setup, I just got an extra confirmation to let me know that, hey, yo, it's green for buys. And if we play this out, we can see that this thing took off, right? And it was a beautiful trade, right? You would have been happy with this trade. So now I don't want to just show you guys two examples where the indicator is going with you. I want to show you another example, or two more examples where the indicator was going against you, but taking the trade still would have been valid. So let's go ahead and get into those examples. Now, this is an example of the indicator going against you. However, you still could have took the setup and you still could have caught a W. Now, we're looking at a demand setup / order block setup right here, right? This is your order block / demand, okay? Right there. Super clean, super clear as day. You got a huge impulse candle coming up out of here, right? So we obviously know buyers are present at least right here. Now, granted, this was created because of news, but it doesn't really matter. Right now, if you trade supply and demand, typically, like how most people, I know most of you guys learned it, right? Because y'all probably learned from Doyle. You know, shout out to Doyle, right? You probably taking a break of candle, right? Or maybe you got in aggressive down here and you looking for like a 1 to 2 or whatever, right? You could have took this trade. However, if I turn on these moving averages, watch what happens. The moving averages are going against you, right? And so this is an example of a winning trade that you would have missed out on if you were using you know, indicators as a determining factor. This is why I told you guys, like, indicators are good confirmations, but they're horrible determinations. Like, you shouldn't be using an indicator as the sole determining factor on whether or not you're going to enter a trade or not, okay? Because this is still a valid setup, right? I don't even have to go to the higher time frame, right? Like, that's another thing. Y'all be thinking that you have to have the higher time frame with you in order for you to take a setup. Sometimes, bro, you can stay on the lower time frame. Is it good to have higher time frame confluence? Yes. But if a setup looks good on the lower time frame, there's nothing wrong with taking it solely based off the lower time frame. Like, y'all don't have to always have higher time frame confluence. But, you know, this is an example of the moving averages going against you. But you know, I got another example for y'all. And let's just go ahead and scroll down to it because it's literally on the same day. So we got us a uni here. All right, we got us a uni. Chris, how is this a uni? We got a low, a high, a low, and then we got a new high put in right here. So what happened? All right, we swept this low right here. That's your liquidity sweep. Right, so this is our last bullish candle before the sweep of that liquidity. We got a fair value gap overlapping our breaker block. So this is a valid uni. Now, this is an example where one of them is going with you and one of them is going against you, right? So you got the non-EMA with you, which means you have momentum on your side, but the overall intraday trend, which is the 50 SMA, is going against you. Are you taking this trade or are you not taking this trade? If you need both your moving averages, or if you need both of your indicators to be going with you, you're probably not taking this trade. But this is another example of, if you would have took this trade, you would have been making money regardless on if the indicators were with you. So all I'm really trying to show you guys or say in this video is, like, indicators are not going to be the thing to save you. Okay, like, you have to understand market structure. You have to know what you're doing as far as analyzing a chart, because indicators are horrible determinators, right? Stop using them as a determining factor in your trading, right? I tried it. Trust me, if it was that easy, everyone would be trading. Like, indicators are horrible to use as the determining factors in your trades. I know people will try to tell you, bro, all I do is this, bro. All I do is look at for an MA cross, bro, and then I just take the trade, bro, and I'm profitable doing it that way. They're lying to you, because again, if it was that easy, everyone would be doing it. Right? Let me tell you what really turns you into a profitable trader. It's not your strategy, it's not your indicators, it's your discernment and it's your judgment, right? Like, there's a reason why you can learn from a YouTuber right? And you guys are using the exact same strategy and they have a profitable day while you have a losing day. Why is that? It's because their experience and their discernment in the market is different than yours, right? So you just got to build that up. Stop looking for indicators to come in and save you. They're horrible determinators, okay? Get that in your head. They are good confirmations, horrible determinations, okay? Now that's all I got for today's video, man. I hope this helps somebody, and I hope this answers your question, gang. I already told you I was going to answer it on YouTube anyway, so I hope this answers your question, but that's all I got for today's video. I'm going to catch you guys in the next one. I'm gone.